What is the outlook for the mortgage markets in 2021? What is the outlook for the housing market? And what is the outlook for the economy in 2021? Will interest rates rise in the year ahead? Did you miss the opportunity to refi? Did you miss the opportunity to buy a home at an epic home loan rate? Will housing remain strong in 21? So many questions. My name is Kevin Martini, and I am the Chief Mortgage Strategist with the Martini Mortgage Group, and this is a special episode of the Martini Mortgage Podcast called the 2021 Interest Rate and Housing Outlook.
This is the Martini Mortgage Podcast with Chief Mortgage Strategist Kevin Martini.
Thank you for tuning in to the Martini Mortgage Podcast. This is going to be a very special and important one since I'm going to share my opinion on what is going to happen with interest rates in 2021 and my opinion on the housing outlook for 2021 too. You know, I recall my grandmother sharing stories about the good old days. You heard the stories too. Way back when she could buy this for that. Or she shared how much she had an opportunity to buy something for so much, but she didn't, and now it's worth this. Right now, I truly believe that we are living in the good old days of interest rates and in the housing market, so you will be able to share with your children and grandchildren all about your good old days. I want to start by sharing, you're going to hear the name Janet Yellen a lot, and you're going to see it too. Does the name sound familiar? Yes, she used to be the Fed chair, and she's now going to be the Treasury Secretary. I say you're going to see her name a lot because her signature will be on all the currency that is printed. This is one of the perks of being the Treasury Secretary. I have found that Janet Yellen is very different than the current Treasury Secretary, and there's really nothing wrong with different. For example, in England, they drive on a different side of the road than we do in the U.S. Again, they drive on a different side of the road, not the wrong side. Historically, she likes spending programs. And the current Fed chairman likes expanding the reach of the Fed programs. So buckle up, folks. We're going to be in for a ride. Let me expand and share some indicators. To me, the indicators are associated with Bitcoin, gold, and silver. When Janet Yellen was announced as the incoming Treasury Secretary, these fixed assets like Bitcoin, gold, and silver have seen a significant rise. And it's my opinion that some investors are positioning for a devaluation of the US dollar, and this is happening right now. And the bond market doesn't like it, or at least in recent trading days, it does not like it. And I believe the reaction we have seen in the recent days is because of concerns that inflation will be rearing its head. Some traders are intending to get ahead of the curve with these fixed assets. Yes, I'm a podcaster, but I'm also a mortgage strategist, and I continuously monitor the bond market because that is where home loan rates live. Mortgage rates come from mortgage-backed securities, or MBSs, which are bonds. When MBS's prices drop, yields increase. And when yields increase, so does home loan price rates here in Raleigh, or really in any city in the U.S. for that matter. You see, inflation is the nemesis to not just the MBSs, but to any bond for that matter. Now today, and it's expected that the Fed funds rate is going to remain pretty darn close to zero. This episode of the Martini Mortgage Podcast was recorded in January 2021. And in January 2020, the Fed funds rate was 1.75%. This does not mean you can get close to a 0% mortgage rate, nor does it mean a year ago that you were able to get a 1.75% interest rate, because the Fed funds rate is only the rate which commercial banks borrow money overnight. The Fed funds rate and mortgage rates are two different things. Mortgage rates can rise and fall, even if the Fed funds rate remains close to zero. Let me give you a Instagram hashtag Kevin Martini Live nugget. During the period of 2009 to 2016, which is basically a 7-year stretch, the Fed funds rate was basically zero. However, during that time, there were many times that mortgage rates made some massive moves. They were, for a period of a span of time, mortgage rates went up during one period 1.125%, and in another period they went up 1.25% in a very brief period of time. It is important to note that I am not suggesting a repeat of this, but we have to be mindful it has happened in the past and could happen again. Let me share why this is so significant. When mortgage rates move upward by 1%, the home buying power is reduced by over 10%. For illustration only, a $300,000 30-year fixed mortgage at a rate of 2.5 would carry a principal and interest payment of about $1,185 a month. But if that rate would increase to 3.5%, then that same $300,000 home with a 30-year fixed mortgage would carry a principal and interest payment of about $1,347. Yes, the 1% upward movement in rate cost an extra $162 a month more, and that may be out of your budget. So if rates go up and you need to keep the same payment, you would only be able to get a mortgage for $265,000 because the principal and interest payment on a $265,000 home at a rate of 3.5 is right at $1,189 a month. Am I sharing this to tell you to buy today? Nope. No, I am not. I am sharing this to highlight the impact rising rates have on your monthly payment and to highlight today, I believe we are living in the good old days and rates are historic and buying power is magnified because of the current rate environment. I do not know if you should stop renting and buy a home today. I also do not know if it's time for you to upgrade your home you are currently own. However, I am suggesting that right now is time to explore your options. The process always starts with the home loan first. The first step is to get the loan, and the second step is to go find your home. Myself and fellow mortgage strategist Logan Martini are able, ready, and willing to help during this discovery process. And you can reach us by simply calling 919-238-4934. The other day, I was on a Zoom with a family that is moving up. In other words, they have outgrown their current home, and I developed a strategy where they can buy first and then sell. One of them said something, and it went like this: the government is printing money like it's going out of style. I need to highlight, the government is not printing money. They are issuing debt, and there is a difference. The borrowed money is being injected will help economic activity. However, there is a time that the debt needs to be paid back, and that could slow activity. Historically, this has always happened. I'm not sharing this to alarm or to scare. I am sharing this to highlight we are living in the good old days right now with mortgage rates, because as debt rises, home loan rates decrease. But historically, as debt service comes into play, after the economic injection, mortgage rates will rise. Do not misunderstand me. it is my opinion that mortgage rates will remain low in 2021. But keep on the radar, there are some potential inflation headwinds coming, and inflation is the nemesis to the bonds, and mortgage rates live in bonds, and that could cause higher home loan rates, and higher home loan rates could reduce your buying power and cost you more every month and over the life of the loan. Let me share my thoughts about housing. Housing is hot today, and I believe housing will remain hot in 2021 and beyond, and beyond, and beyond. Did you know that the median age of a first-time home buyer is 33 years old? This is important because 33 years ago, there was an explosion in births. And for the next 3 years, there was an explosion in births too. So next year, the 32-year-olds will be first-time home buyers. And in 2 years from now, the 31-year-olds will be at the age of 33, and poof. If you think the demand is high today for housing, it's going to continue to heat up and heat up and heat up. Demand has been high and there is pressure on supply, but the demand has been rising and the pressure remains on supply has been exaggerated because of COVID-19. And simply put, new construction has not been able to keep up with the demand. Right now, there is not really an incentive for a seller to drop price, especially with this record low inventory. This is one of the many reasons it should be loan first and then go find your home. You see, in today's market, telling a seller that you are ready to buy their home is irrelevant. I believe a seller could care less if you want to buy their house. Sellers are only accepting offers from buyers that can demonstrate they are able and willing to buy the house. The only way you can communicate that to a seller is to be approved, not just qualified. And being approved by a local lender, I think, amplifies your opportunity. Again, it should be loan first, home second. When working with myself or Logan Martini, you'll be able to make a same as cash offer with a Martini approval letter. If you have questions about getting approved or about how to make a same as cash approval letter with your offer, just give me, Kevin Martini, a call, or Logan Martini a call by dialing 919-238-4934. Is now a good time to buy? Yes, it is. Is it right for you and your family? Listen, homeownership is not right for everybody, and there is a time to rent rather than own. However, it is my opinion that time to rent is not now. Today is a good time to explore your options. Don't let what you heard way back when influence if you are buyer able or not. There are unique programs offered by the Martini Mortgage Group to help families with low credit scores and to help families with low down payment too. I believe that 2021 will continue to see favorable interest rates, and the demand for housing and the tight supply could yield some healthy appreciation. In fact, some folks are saying 6% appreciation. Let me share this hashtag Kevin Martini Live talking point. If you purchased a home and put 10% down and there was a 6% appreciation in the first year, that would equal a 60% return on your down payment. My name is Kevin Martini, and I am a mortgage strategist, and this was episode 117 of the Martini Mortgage Podcast. Thank you for tuning in, and know that myself and fellow mortgage strategist Logan Martini are here, and we invite you to give us a jingle by dialing 919-238-4934. Oh, by the way, you can check out our winter home buyer guide, which is called Things to Consider When Buying a Home. It's completely free, and by going to www.martinibuyerguide.com. Again, thank you for tuning in, and please share this episode of the Martini Mortgage Podcast with someone you care about.
The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, stability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962, branch located at 507 North Blunt Street, Raleigh, North Carolina 27604. Contact the branch by calling 919-238-4934. Equal housing opportunity.